So today we're gonna take a deep dive into the French and the German startup ecosystems, explaining more especially the differences between the two ecosystems, but also how and to which extent these two ecosystems are similar. So first, obviously, we're going to introduce ourselves. Then we'll have the panel discussion, and we're going to focus on three main topics. And then we'll have the office hours. Just for you to know, normally the discussion and the panel will last 30 minutes, around 30 minutes. And then we'll have plenty of time for your questions. And we'll have obviously also time to just interact with each other. Starting with the introductions, and I'll let someone else introduce themselves.
Cool. Then maybe I start. I'm Max from Speedinvest. I'm in the network effects team at Speedinvest, which means we are focusing really on platforms, marketplaces, and everything around network effects. So we really love things from A to Z, meaning we invested also from a procurement platform into a fresh fish market. And probably most famous portfolio company at the moment is Tier Mobility, the scooter company. And yeah, my colleague Shiraz from who's also in this call is also from Speedinvest, but maybe she tells you which team she is.
Yes, thank you, Max. So I'm Shiraz. I am in the subscription and digital health team at Speedinvest, which means that I look into digital health companies and also into B2C, B2B SaaS companies. I'm based in France, and I'm looking a lot at French companies and sometimes German companies as well.
I think I'm next on the list. So Victor, I'm working at Alven. It's a Parisian-based VC fund where we invest in seed Series A, so tickets between 500K to 10, 15 million euros for the first round. They can go up to 30 million euros during the investment life of the startups. We are a pretty generalist fund. We invest as much as in B2B as in B2C. The pretty famous startups that we have invested in are Stripe, Data IQ, Algolia, Conto, Miro, and many others.
Okay, I'm the last one. So my name is Charlotte, and I work at Paua Ventures. We are a VC that is in Berlin. We do invest everywhere in Europe, and within the B2B, we are super industry agnostic. So we look at a lot of different topics from industrial tech to fintech or healthcare. We do early stage, so everything that ranges from Preseed to Series A. And I guess the most notable portfolio companies are probably also Stripe, actually, like Alven, and Pipedrive. I think those are the biggest ones. Yeah, I'm super happy to be here. And I actually grew up in France, which is also why I'm super interested in the similarities and also the differences between France and Germany. And yeah.
Diving straight into the topic. So first point we wanted to underline here was on the fundraising process. And once again, the goal here is for us is to highlight the similarities and differences. So we'll go straight into that one. And then Charlotte will actually talk about the regional and geographical differences in France and in Germany. And then Victor will talk about the role of universities in both countries.
Great. Then I'll start with what is actually not that different. And we thought it's a good idea to give all people also here in the audience who maybe haven't had so many touch points with venture capital funds before, an overview how the actual process would look like. And when we discussed also internally between the different ecosystems, we figured out that in this perspective, there's actually not so much different. So if you look at the normal process steps, once you get involved with a venture capital fund, you could probably expect a timeline between 1 to 3 weeks. And after these 3 weeks, you will get a term sheet, which means the fund is very interested to invest in you. But what you should consider here is that the long forms and the actually wiring of the money could take much longer, up to 1 or 2 months more. So if you're a startup raising money or funds, you should really watch your runway, and don't expect that once the term sheet is signed, the money is there, because then there's like the legal process, probably incorporation, and always some hiccups. So this is something you should have in mind. When you're approaching a VC, normally you jump on a first call with an analyst or associate like us, and then probably in the second call you meet for the first time a partner of the fund or the person who has the expertise in the respective industry. And normally from there, the VCs take it into their internal deal flow meeting, where the whole team discusses about the opportunity, chances, competition, and so on. And what most likely will follow from that is that you will get a document with a couple of questions where we really want to dive in deeper. And then the last step for you basically is a workshop where our VCs want to meet your core team. So let's say you're a software company, probably your product engineer or product designer is one of your most important persons. So we would love you to bring him to the workshop. And once the workshop was positive, we have our internal investment committee, and then you get the term sheet. And whenever also talking with a venture capital fund, you should also keep in mind what actually their goal is. So they want to normally have around 15% equity in your company. Obviously, this applies to early stage companies. So in Series A or later stages, there might be different dynamics. And in average, also broadly talking, because obviously at the moment the space is quite heated up, the average ticket size is approximately 900,000 euros. In the due diligence itself, for you as a founder, it could always be a big plus if you already have your data room ready. So it helps you to track the involvement of your company, have the growth figures, month-on-month grow, but also, for example, customer interviews or really street research where you go out, interview people. And if you have any evidence about this helps us to assess your company and check the relevant data points and really see if there is a need for your solution or product in the market. And one point which is also often forgotten here is that you should probably have some references in line, meaning ex-employees or ex-employers, colleagues, or even your first investors talking obviously highly about you. So we can get to know you a bit, how you work in different environments, what your current track record so far looked like. And to maybe also flag 2 points where you can avoid basically VCs seeing a red flag is, first of all, and this is a controversial one probably, having a fundraising advisor with too much equity on your cap table. It's your company, you should know it the best. It's also your story and your pitch. And unless you're not a super technical person or never had a sales pitch in your life, or I really want to focus deeply on the product because it's so complex, then you always should do your fundraising efforts yourself. Obviously get relevant help and advice, but don't throw out too much equity too quickly, which also brings us to the second red flag, which is the cap table hygiene. So you as a founder should really focus to have at least 70% of ownership before going into Series A in order to be incentivized yourself, but also to remain relevant and attractive for future investors. And last but not least, and we will also dive deeper into that later in Victor's part, you should know about like how government actually can help you and gets involved. So for example, in France, you have BPI France, which really outpaces Germany with the program. So they just brought a 4 billion startup support package on the road, basically helping you also if you run out of cash, raising a bridge round. And as a French startup or a startup who wants to start in French or expand to France, you should definitely check out their programs. And an equivalent in Germany will probably be Exist, which helps you to launch straight from university ecosystems. But again, here, my colleague Victor will tell you more later about this.
So when comparing the two ecosystems, we usually look at the money that VC deployed in the markets. So if you look at the right chart, you can see that comparing France and Germany, so the amount is more or less the same in France and Germany last year, but the growth has been quite dramatic actually in France, plus 25%, in 1 year versus 11% in Germany. And this actually shows that the interests and the growth of the startup scene in France has really, I would say, caught up with the German ecosystem. And this means that obviously there are more and more startups in France, but also that there are more and more VCs, both local VCs, but also foreign VCs coming to France to fund the amazing startups that we have in France. Then looking at the left chart, we wanted to give you this metric because it can be useful when thinking about raising a round, actually, because this gives you an indication of the average amount that you can raise depending on your stage. So once again, there are obviously differences in the figures you can see in France and Germany, depending on the different stages. What's interesting and relevant here to notice is that the gap between France and Germany is really actually low at pre-seed, rather low at seed, and it actually increases from Series B onwards. And that's also a sign that in France, we might have fewer investors at later stage than in Germany. And I think someone is not on mute. But yeah, so that's really the key messages we wanted you guys to have here with these metrics. And we can go back to that in your questions.
Perfect, thank you, Shiraz. So I think the next topic we thought was really interesting, especially where you can do direct comparisons between France and Germany, is the geography and the distribution of where are the startups located, etc. So on this map, what we try to show is on the left side where you would see France. There's obviously a lot of startups that are in Paris, and then in the other cities a bit less, which shows the sort of centralized system that exists in France. Compared to Germany, where obviously there are also a lot of startups in Berlin, but it's definitely a bit more distributed. For example, Munich is quite a big hub, or Hamburg, and also the whole Western, we call it Rhein-Ruhr-Gebiet, which is where Cologne, Düsseldorf, and a few other cities are part of. So I think in general, Germany is definitely more decentralized, and that I think has to do with a few things. One is obviously the decentralized economy. There's sort of companies everywhere in Germany, and I think in France it's definitely a bit more centered around Paris. The same goes for universities, actually. There's a lot of technical universities which are in different cities in Germany, like Dresden or in Munich. And then also in Germany, you have obviously from a political side of view, the very federal structure, which in France is a bit obviously more centralized and capital/Paris focused. And then what you see here is just a bit of an overview that in the end, obviously it is centered around the capitals, but a lot of startups do come from other cities. And in France, you can see this quite well, where a lot of startups come from the north, from Lille, but also from Nantes, Toulouse, Lyon, etc. And the same goes in Germany, where a lot of unicorns and big startups are coming from Munich or from Western Germany. So yeah, that's a bit, I think, the most important things to say here. And yeah, over to Victor.
Yeah, definitely, and maybe just on this part to add on what you just said. What's crazy in France is that it is so centralized that even some funds only focus in the Parisian area. Like they don't even look at startups in the region because there's so few, and those 100% of the time is focused on Paris. So coming to France is clearly like coming to Paris, as it seems that most of the startup activity, at least for the fundraising, is happening in Paris.
Yeah.
And maybe like so we wanted to finish on that because all those differentiation we've seen, the geographic differentiation like that described by Charlotte, seem to take root, at least for an important part, in the universities ecosystem of each country. as they play a very important role in, of course, nurturing the regional talent and potential CEO ecosystem, and therefore have a huge influence in the financial structure in venture capital, but also, and that's maybe very interesting to you, have a strong influence on venture capital policy and strategy to support our companies in winning in our home market. Maybe to start with France, we've clearly seen a strong shift in the past 5 years in the structuration of the French ecosystem around the 4 poles, which are universities, incubators, funds, and of course governments. And universities clearly stands as the cornerstone of this ecosystem. Like, to give you a little data on that, a recent study showed that out of the last 1,000 biggest funds raised in France in the past 5 years, more than 52% of funders came out of only the top 5 engineering and business schools in France. So it is very, very, very concentrated around those universities. And this is because maybe first, top universities really adapted to the Silicon Valley model with, as we put it here, the example of HEC, like building a strong entrepreneurial program and ecosystem around the school. Second, in addition to traditional and selective engineering and business school, we have like lots of new types of schools, such as École 42, Éthique, etc., that are taking care of producing developers, tech guy in a more hands-on way. And so that finally, the French talent pool is increasingly willing to found or work in a startup, which is a radical change of mindset compared to like the traditional prestigious corporate jobs for graduates. And for example, again, a recent study showed that more than a quarter of HEC Paris alumni say they want to start their own business. And on top of that, another quarter, so half of the school say they want to work in startups. So that's just crazy. And this led to a structuration of the venture capital ecosystem around the school. And so a geographic concentration of those investments around those schools. We have in France, for example, funds that are dedicated to those universities, like Paris-Saclay Fund, or even scouting program in those schools. And this drove, for example, like I think HEC underlined that they received like more than 400 million euros investments in companies that were built in its schools in the past 4 years. As for Germany, the influence of the university ecosystem appear to be as significant. Like, Germany is extremely recognized for its talent pool, but however, it's way more fragmented with few schools with fully specific entrepreneurship program. Like, we have the WHO or the CDTM that have a huge influence in the ecosystem. Like, it appeared that CDTM played like a huge role in advancing Munich as the second tech hub in Germany, like building a very strong ecosystem. And I wrote that no other German university produced as many startups as they do, and that they received more than like 2 billion investment worth funding, which is pretty crazy. And like in France, it seems that their funds in Germany are also building bridges, like mentorships program towards those universities. But still, it is barely a rare case in Germany, where the market is less concentrated, and geographically speaking, and in their way of building and producing talents. And so that's where, like, taking money from a foreign VC in the country you want to enter may be very interesting, because, as I said, funds are building bridges between the startups and the universities for funding, of course, but also for recruitment, incubation, ecosystem access, etc., which may be compulsory if you want to enter the French or the German market. like the links between the VC and the school are very strong, and we spend a good part into helping entrepreneur navigate into like through those specificities in each region. Yeah, I don't know if you want to add also something in the, like for the German area, Max or Charlotte, but.
So as you said, I think in Germany, CDTM, obviously a spin-off from Technical University Munich, but also WHU. And there's many more like EBS and many entrepreneurial focused schools. And I think what you can definitely see is that obviously from TU Munich, there comes more the technical and yeah, deep tech stuff, while from the other entrepreneurial focused schools, there comes more consumer focused models probably, and but also again accelerated through the pandemic. You see it's also decentralizing, right? And people are starting without any university degree, so also this section shouldn't show that you can only start a successful company if you're coming from one of these universities. However, it might make sense to stay close to one of them, maybe not as a student, but around them normally you find the VCs hunting for the best deals. So I think it's opening more and more, and the academic title itself is not, like, especially in venture capital, I think not the most important stuff. It's much more your grit and ability to profit from a network where you're actually not a part of, right? So if you make it into this ecosystem, you have exactly the same chances and resources like probably everyone else.
Definitely.
Cool. So I think from the official content part, this would already have been it. If you want to have our content details, we probably got some emails already in the invite, but upfront we also received some questions from you. So as a VC, what is the best way to introduce portfolio companies to later stage VCs? I think the best way, actually, if I may start with the answer, is on how normally the VC ecosystem works is the VCs have recurring catch-ups with each other. So it means that I would talk with Charlotte, or Victor talks with Shiraz, but also talking seed and then Series A, Series B. Obviously, the funds more down the river, meaning later stage funds, have an interest to get to know the hottest seed companies which are doing well quite early. So if you have a company in your portfolio and you're VC in a super early stage, probably, it's always in your interest to secure the best follow-on capital for your company. So if you have something, treat them like it would be your own company and pitch them to other VCs and try to create even some FOMO, right? So fear of missing out. And that's something which really works really, really well in the venture capital industry, to be honest. So if many people talk about one company, everyone gets excited and wants to get in. And so this is maybe some levers you probably know if you're in the VC industry or also as a founder, which you can use for your own benefit, to be really honest here.
Yeah, maybe to add another point, I think it depends, I guess, on every VC, also on how large the portfolio is or how operational and close they are with the companies. But for example, when we have a company in our portfolio that is fundraising, we sit together with them, we actually think together with them about the pitch deck. Also, obviously, depending how much support they need, some are very advanced already, they don't need it, and the earlier stage ones, they really are appreciated of the support we can give them. And then we usually do like a list in Excel of all the VCs that we think might be interesting for them, and then we try to reach out through our contacts, and then that's it. You don't pitch it with them, that's basically their job then. I think that's also comes back to the sort of red flag from Max at the beginning, but in general, there's a lot of support there, and we really want to help them succeed.
Yeah, definitely. And I'd say also that we are in Alven, for example, is a 20 years old fund, and we have been like co-investing with many other VC funds. So we've clearly built some historical trust between each other. So we know basically what each fund likes and how to pitch them. And so we have like clearly an edge on introduction for our portfolio companies to them due to our like co-investment history.
Cool. Maybe up to the next one. How do French and German VCs compare in terms of risk aversion or risk acceptance? Any takers?
if I may on this one, I actually think that it's not a question of French versus German. Actually, I really think that it depends on the VC and on the team that composes the VC. And so, you can have French VCs that are really not risk averse, risk lover, I would say even. And then you would have German VCs that are completely risk averse and vice versa. So yeah, here I just want to say that I think, and that's very personal, right? But I think it's not a question of country, but rather a question of the history of the fund, and obviously a question of how is the team. And I think you can have a look at the VC's portfolio in order to make up your own mind and see whether the VCs are risk averse or not, depending on the companies they have invested in.
Yeah, and I think it's also a bit dependent on the lifetime of the fund. So, for example, usually at Paua Ventures, we're actually now starting a new fund, and at the beginning of the fund, you definitely behave differently regarding risk as you would towards the end of the fund. So usually it's like 10 years. It can be longer or shorter, but that's sort of the classical duration of a fund. And then obviously in the first years, you might be a bit more risk, do just like more risk investments, and then at the end maybe a bit less. But then it's sort of also depending on in which year of the lifetime of the fund you are, I guess.
Cool. Yeah, I think everything has been said here, and obviously what you could maybe not see from the outside, but on the inside, it always depends also on the fund model, right, of the fund itself. So how much you're willing to invest in a company. Obviously, pre-seed is much more risky than a seed or a Series A fund, but therefore also the ticket size is much smaller. So you try to hedge here a bit, I would say. Up to the next one. How can the hosting VCs help startups reaching customers in the respective countries? I think this is a really, really good one. Who wants to start?
Should I? I think that's actually a very important role of the VC, is that you help them reach customers. And I can only speak for the B2B space because we're obviously focusing on B2B. We don't invest in consumer topics, but what we do here is we try to really introduce the portfolio companies as soon as we can to all of the sort of enterprise corporates or other companies in our network. And those are actually a majority the ones that invest in our fund. So our sort of investors are corporates, and we try to connect them with the startups really early on, because it's like a huge win-win situation. For them, it's like a great filter to get to the best technologies. And for the startups, it's obviously the best way to get to their first 5 to 10 customers, which is critical in early stages. And we actually do that sometimes, or other VCs as well, I guess, in the due diligence phase, when you want to understand, okay, is there sort of a product market fit? What you would do is you would introduce them to companies and see, is there actually a pain point? How are they solving the problem right now? Would they be willing to pay for this, etc.? And I think it's really important for VCs to play that role. And obviously it's a win situation for them as well, because they want their portfolio companies to succeed. So obviously they will try to do as many introductions to companies as possible, and to the right people as well, which is, I think, very critical.
Yeah, maybe to add one point here, as a VC, we have investors ourselves, right? So we have LPs, which are people who actually give the money to the VC funds to invest. And often these are entrepreneurs themselves or companies. And what at Speedinvest we normally also do is talk to them, and especially reaching other countries, we would say, okay, what kind of LPs do we have in France? What kind of contacts do we have there? And also talk probably with competitors from the other countries to see what their go-to-market was, how they actually approach customers, and really try to leverage also our own network. And this is something I really want to also point out. You should actively demand as a founder from your VC, basically, because it's not that they should give you the money, but should be smart money, and they should be able to contribute you and help you actually, as it is in both interests, right? So that's maybe my 2 cents.
And maybe to add on what you guys just said, I think also that there is usually when you work with a VC or you get backed by a VC, you join their community of founders. And I think this is also a powerful tool for you because as we all said, I think we're really European VCs. So if you end up working with the European VCs, there are 100% chance of you having a founder from another country that you are interested in within the community. And so then you can obviously, just exchange best practices, tips, and even talk about how did they reach their customers in the countries that you're targeting.
What really motivates you to invest in early stage companies? I think this is a quick one where maybe you take one or two answers from you guys.
Maybe on this one, it may be a little obvious, but really in the early stage companies, the only thing we look at mostly is the team and how. The background, the team, the fit we have with the team. So it's like 99% this that drives our investments at an early stage. Because when we're talking early stage, it seems that in France or in Germany, it's more and more early. We invest now even before product launch or even before the first customers, and so we must rely mostly on teams. So that's really the number one and maybe the only thing we look at investing in early stage companies. The second thing also we tend to look at is of course markets, because we are VCs, and so we want to invest in companies that have the potential to be billion-dollar companies. So the markets have to be profound. So this may be the second part of this of the study before investment.
Great. Maybe also from my side here, from motivation itself. Obviously, it's always nice as a VC to see also from why we probably choose this job, to see the newest trends and new developments, technologies, and you learn so much about industries and new industries every day, where you also have to be quick. But then once you're in, you just think that's amazing. Why has no one else built this so far? And as Victor said, it's also the combination of unique teams and unique products. And also, I think while Dan is still typing his question, there was one great comment from Sabine, who mentioned La French Tech in Berlin and Munich. Seems to be a cool cross-border initiative. So everyone click on the link and check it out. And then if EU firms looking to go straight side in the future to get access to larger growth funds and expand into the US market, what does the process of bringing portfolio companies to US investors look like for you? Is it just a case where the best networked fund in Europe know the US funds, or is there something that other EU funds can do to generate interest? Okay, that's a big one. What does the process of bringing portfolio companies to US investors look like for you? So I think if I start, one trend we definitely see is that many of the US funds now discovered Europe as a real battleground for hot deals. And if you look, for example, Index Ventures, one of the really good funds from the US, but also a long-term in London already, launched the 200 million seed fund. And normally they were a growth fund, which means they invest much later in the stage. So they are having all their eyes on Europe. And I think it's not that the European funds still have to generate the interest. It's there. It's really just to see how you can maintain your own ownership and interest in the company and bring your startup to the best possible follow-on investors. So from my side, to answer your question, then I don't think it's the best networked funds, but it's just really the best deals, as trivial as it sounds. But they check them out themselves and probably even approach you once they're interested. So I think the game that only US funds are getting, it's hard to approach them and to get the interest is shifted even more due to the pandemic.
Yeah, and I think also because in Europe, in the last years, there's just been a lot of sort of very new technology. There's a lot of different sort of flagship industries that have developed, and also stuff that I guess there's definitely topics where the US is still much advanced to Europe, or where sort of startups are created always with a bit of a head start to Europe. But there's more and more topics. One example would be, I guess, climate tech, where Europe is really ahead, and where these topics and these founders are coming from Europe. So US investors start really looking at European companies. And I think very concretely answering your point, Dan, is I think it comes back to sort of the whole, obviously we talk about our portfolio companies to all of the investors we talk to on a regular basis, and we always try to like talk really, like obviously present them, and as soon as they go into fundraising, talk about them even more, and that holds for investors in Europe, but obviously also in the US. And then I guess the venture capital business is a very network heavy business, so for us it's obviously really important to have these relations, and I guess we all know that having these relations to the US is also very, very important. Yeah, I think that's basically it.
Maybe to add also on what Max said regarding the best companies, I think also that in the last few years, the US saw that Europe has also great founders. And I think, going back to kind of the team, because we said that obviously this is one of the most important criteria that we look at. And I think that, they've just seen that we have great universities, as Victor pointed in the presentation. And we have actually great founders who went to the US at some point in, maybe 10 years ago, because we didn't have the right ecosystem in Europe. But now that we do, actually they're coming back. And I think this is kind of a dynamic which has been created in the last few years, and which, naturally tends to kind of send or bring back the US VCs to Europe. So that's kind of what I wanted to add. And maybe for Speedinvest, more especially also how we bring our portfolio companies to the US. So we have one of our LP, which is a US VC, actually a growth investor. And then we also have obviously a network of US investors out there. Once again, we also see this trend of them coming directly to Europe in order to hunt for the best founders and the best deals.
Definitely, and just to add on just a little fun fact on what Shiraz said, and which I totally agree with. I was talking to an insight partner, a Silicon Valley investor that has told me that now when they're looking to specific sectors, like for example, we were talking about the data stack, they only looked at startup that had French or German engineer. Like clearly we have clearly an edge on it seems that we have clearly an edge on these fields, and it is global. And so US funds are very actively looking at Europe. So we may not have much to do to introduce our portfolio companies to them. They are for sure looking at it for since a long time now.
It's a great time to be a founder. It is actually.
Yeah, that's true. Yeah. Then maybe to the last upfront question, what concrete value do you add to your portfolio companies? And I think that's a really important question, and builds actually on many points we've lined out so far. So obviously, just 3 points from my side: contacts to companies, ensuring that your follow-on raising is successful, and presenting you as on a golden plate to everyone as a startup. And with Speedinvest specifically, we have like a operational team, which is called Platform Plus team, which helps you in terms of growth or hiring, recruiting, and general market expansion and business development. And I think more and more funds are offering this because money is not anymore the game changer. It's actually you have to go one step ahead and provide really the value add, the famous value add everyone tells you they will bring. But as a founder, you should really test it out and see how far the VC will go with you and how they can really help you.
Yeah, maybe to add on that. So I think it's the same for us. We see two topics where we really have to add value. One is customers, where we do interest to companies, and the other is helping you build the teams. We think that sales and hiring are really the two main challenges for startups in early stages. And on the hiring, we also have someone in our team who's 100% dedicated to helping hire and building the teams with our portfolio companies. And then maybe the last thing, I think it's also the role of sort of a sparings partner. Often in early stages, as a founder, there's a lot of challenges. There's a lot of topics you might maybe want to discuss with someone who's not in your company, who's not in your sort of closest friend circle. And then VCs are actually good contacts that you can sort of call or message any time of the day or at night, and problem solve together, talk about challenges, also about personal stuff. So I think that's also quite an important value add.
Yeah, definitely, and nothing much to add. Is basically the same here at Alven. We also have this what we call a platform team, so like operational team that helps the startup in our portfolio operationally. On top of what I find is the main value of a VC fund, which is like strategic support, because we're seeing, of course, thousands of startups each year, so we kind of build a strong expertise on how to. Like what's the best pathway to build a billion-dollar company. Maybe just one thing, maybe on top of that we also try to do at Alven is we have clearly also a part of the team that are dedicated to helping our companies fundraise in the next round after us, because as we invest at early stage, it is often, not to say always, the case that our portfolio company will raise again pretty soon, and so we have like a dedicated team to that, and partners that are helping doing that also.
So thank you everyone, also from the audience who contributed to the questions, and also your time and interest. And as the others already said, feel free to reach out to us anytime. And yeah, other than that, stay safe and have a great rest of the day.
Thank you, everyone.
Thank you.
Bye-bye.
Bye-bye.